So hello everyone. Today in this video we will be doing cash flow statements for ATS Adventure, and we will be using indirect method. So for this assignment we will be needing our income statements, and then the journal entries and income statements. I have my T accounts as well, but they don't have explanation for each transaction, so we will be better off using our journal entries for this one and income statements. And so let's get it started. We divide the cash flow statement into three sections. First section is for operating activities. So here we will be recording transactions, and we will be counting the balance for the ones that directly relate to our core activities. So also in the indirect method, we will be needing our net profit from income statements, net income, and in this period now, what we will be doing, we will be adjusting our net income into cash flows. So the difference between the income statement and cash flow is that income statement uses accrual method. So sometimes the transactions were added to profit even if they was no cash included. So the profit is recognized when it's earned, not when you receive the money. And it's the same way for expenses and losses. We record them when they're incurred, not when we lose them. Like, not when we lose them literally. So that's the basic idea behind it, and we will be adjusting. So based on our income statement, as we can see, our net income is 237. Amount, here is our explanation. Well, mostly my explanation will be verbal. So I guess this will be blank, but just let's continue. First things first, we go on the expenses and losses. And here we have the depreciation of sword. So here, as we can see, it was deducted from our net profit as its expense. From this one, it was deducted, but it doesn't include the cash transaction. So it doesn't affect our cash balance. That's why we add it back to our balance. So plus 8, it will be just 8, right? So that's why it is here. Then the second thing here, it is our bad debt. It was also deducted as a bad debt because here the Atia, she earned the reward, right? She earned the bounty, but she didn't receive the bounty. That's why it was deducted from the profit. That's why it's kind of expense. The effort was there, but no result. But in cash accounts, we don't care. There was no cash transaction. We didn't lose cash. So bad debt. We can say uncollected bounty. So here it's 30. We add it back. And then there is loss on theft. Actually, this one is a bit tricky because she lost her purse, and you can say like she just lost the purse, right? Maybe it was worth of 15 golden pieces, but it was not really like that. It was the case was that the purse had 15 gold pieces inside of it, so it's also loss of cash. So that's why we don't record it in here. It doesn't need adjustment. So we skip this one for now. Like we skip it here. So the next thing that we add here is our loss on, where was that? Yes, it's here, here. Okay, this one. It's also one of our operating expenses because um we needed those we needed that in inventory for her to continue working, for her to continue her journey. And it was essential for her, but and she lost it. And that's why we recorded in the operating expenses as well. So let's go and record it. It was inventory. It was 5. So it's also positive because it was deducted from our net income and it doesn't include cash. That's why we're doing it here. And let's continue. And you may ask, like, why all of them are in operating activities? Depreciation of sword, uncollected bounty, loss on inventory. You can say that inventory is like part of investing activities, right? But we don't do it here because when we do indirect method of cash flows, we do adjustments in operating activities. So here we record all of the adjustments, and the financing activities and investing activities, they will be just recorded as plus or minus. We calculate them without using net income that we found from income statement. So that's why it's in operating activities, according to the rule of using indirect method. The next thing, here we don't track it. We don't do so. We don't do this one as well because we just paid in cash to her, firstly 2 and then 3, and then this one as well. So what we record is that here, this one, revenue on barter. So this one, 8 is like kind of the profit that we got from the selling, from the sale, uh, from the exchange, right? But it was not like a direct cash profit. It was just value, which was more in 8 golden pieces, but not in the cash itself. So, and it was traded for potions, as it's written here, for potions, not for cash. That's why we should not record it as a profit. uh, barter revenue, we can say, -8. So then we have the next thing. Uh, Here, this one. So here, we have cash, which is 30, and here it's 25. So we have a gain of 5 golden pieces from that sale, but in the journal entries, but in the income statement, it's just written as 30. So it was already counted. Sorry, I got messed up. I messed up a bit. So the gain is also accrued gain. It's not like a direct. We did not get additional 5 golden pieces from that. So we should not count it because we already counted this 25 as 30 in our income statement. Not in income statement, I guess. Yeah. Here, as a cash, it's counted as 30, that's why. So that's why we remove the gain from sale. Hope it's understandable for you. We deduct this gain as it is kind of fake gain for our cash flows. It's only like earned. The next thing we have increase in inventory. So about inventory, actually we have in journal entries a lot of transactions with it. So it will be better for us to calculate the total. So it's 12. And now it's 7. Now it's 15. Now it's 27. Oh, sorry. Let's calculate it. The in total inventory. Hmm. So let's calculate the total inventory. So 12 uh, minus 5, 7, 8. So it's plus 8. 7 plus 8, 15. So then we have this. So 15 plus this. So it's 33. And then we have this cost. So it's minus. So 33 minus 12, it's 21. We're getting 21. Opa. Oh, sorry. So let's continue. Here we have increase in inventory. So we what do we do with inventory is we deducted the total inventory because because in income statement it was added as earned increase in inventory. So but it doesn't include like cash transaction according to our main logic. So since we're separating accrued uh, accrued accounting, right, from real accounting, maybe uh, we do deduction here. Then what we have, the final one here. What we have, something. So now what we do is we calculate the days that Atia supposed to stay and the days that she reserved for the stay, but she didn't use the dates. So the starting is 9, so she paid first in 9, and it's for 3 nights, so uh, 3 per night, and then she prepared. Um, she got as a like cashback from not like cashback, but just she received refund from hotel 3 golden pieces because she didn't stay for the short night, right? And then she stayed for here I forgot. Yeah, for 2 nights. Per 2 golden pieces per night, and here somewhere. So how we calculate the accommodation, the total one here is that we need to calculate the days that she actually stayed and the days that she paid for. So in income statement, the income statement only cares about uh, how many days she stayed, and the cash flow we track uh, how much money she paid as a prepaid expense. So firstly she paid prepaid 4, and then she didn't stay there and she left here. So Here we have 9, and she stayed there for 2 days. So 3 per night, it will be 6 in total, and she got 3 refund. So we add 4 and 3, we get 7. And this 7 we can record it as prepaid accommodation. Basically saying, so it's the days like she spent money for not staying. And you cannot see this balance in income statement because it's not calculated there. It's a balance sheet thing. I don't have balance sheets, so let's write it here. -7. And what is the total now? Let's calculate it. Total net cash from operating activities. So it's going to be -8, -5. This one and this one cancels out. This one and this one cancels out. 30 minus 21, it's 9. 9 minus 7, it's 2. So it's plus 2, 239. So let's continue. And now we found net cash for operating activities. And this is the main difference using the indirect method. So for other activities, uh, like financing and investing activities, we just count the cash inflow and cash outflow. So let's go ahead and just track it. Uh, so first things first, in investment activities. Um, so one more time, we're looking at the cash transactions. So now we don't look for adjustments. Now we're searching for financing activities. Oh, I'm sorry, we're not looking for finance. Ah, no, we're looking for investing activities. Let's do first investing activities. So let's go. So first things first, investing activities, it's this one. So we bought this chainmail. No, we got it fixed or something. I guess, yeah, I guess she got it fixed. So she spent this one for fixing her something, armor or something in chainmail. So we record this uh equipment. Is it equipment? Yeah, yeah, yeah. Just copy. So we do it here as uh -60. So it's cash outflow because we spend money for it. We spend money for fixing our armor. And why it's in investing activities? Because she needs her armor to get fixed, right? So that she can continue grinding, so that she can continue. No, 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 no. I'm sorry. I'm sorry. It's not operating because it's a long-term thing. So she could work without fixing it, but she would need it in the future as well, her armor. So it's a thing which is like long term. That's why it's in investing activities. So let's continue. I hope my explanation is not getting confusing. So one more time, why it's in investing activities? Because she got her armor fixed so that she can use that armor safely for the long term. For a short term, she could use without fixing it, but it would be a bit risky. For a purchase of mule, we need because it's also the equipment here where it was here, same equipment, but it's also the long term. So she is purchasing this so that she can use it in long term. Mule is forage, if I'm not mistaken. Yeah, mule is forage. It's minus 25. So it's also cash outflow because we spent cash to buy this. So let's calculate. So I guess that's it for investing activities. Yeah, that's it. Mostly the investing activities here is equipment and what supplies. So subtotal. Subtotal is or something left. Let's see. 2007. Yeah, we actually sold it. So sold it is actually yeah. So selling is also part of investments, right? We buy investments and we sell them as well. So we sold what we bought for long term, so it will be part of investment activities. And since we sold it, it will be recorded as positive sale of new new. We sold it for 30. Yeah. So subtotal is 55. Yeah. Or minus 55, I guess. Yeah, minus. Now we have financing activities. So this is the money that goes directly into our, let's say, business, right? That we get kind of funded and get capital. So first things first, in the beginning, she gets initial capital from her boss or something. Initial capital, which was 50 gold pieces plus. Then she gets so basically she got this money and it's in financing because her boss was thinking that she would use this those gold pieces for her to accomplish her mission, right? For her to do the business. Nothing personal. Just so I remember it like okay, just it's here. Yeah. So proceeds from she also got funding from Mia. She got funding from Mia. Let me find it for you. Here, I know. Here, yeah. Loan. She got loan so that she could continue her work. So she got sponsored me, like borrowed money from her. So it's 60, and it's plus. Oi, 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 oi. So total. So total is 110. So let's continue. Subtotal 100. But actually, we also paid off the loans, right? Uh, here, so it should be also recorded in financing activities that when we pay off the uh, loans that we get, let's say repayment of bond. It's how much it was? 20. It was also with cash, so it's minus 20. Then have uh we have, oh yeah, yeah. So we have this one. It's also financing activity. Uh, so she got this capital from Lucius when while because she worked in escort. Yes, she did her job very well. It's like additional payment, right? So let's go. Let's track it. Additional mm, capital from Lucius. Lu- Lucius. Lucius. So it's 30. It's also in financing because uh, she got bonus for the work that she did. And now it must be it. So now we calculate the total. So total for financing activities. It's 110. So let's see. Have this. We add to this one this. Where is my calculator? 239 minus 55 plus 120. So this is the balance that we get. So this is pretty much, oops, this is pretty much it. Let me see. We need to record it. So now, 304, it was a positive number, right? So it's the total net increase in cash for Atia Varol. So it means that your 20 days trip was profitable. Total net increase. So now everything is done. Hope I didn't omit anything. An explanation was verbal. So that's pretty much it. I hope you like my video. So I didn't miss anything. Yeah, I didn't miss anything, I hope. So we calculated and she got the net increase of 304. So this is the real cash balance, cash increase that she has. It's not accrual, it's the real accounting we used with indirect method. Thank you.